We have heard of accounting. We gone through that very deeply. What is accounting? What's double entry? What are the international accounting standards, depreciation and this and that and overall. But let's see that in overall way, in some simple language, that what is accounting cycle, where it starts and where it ends, how the process is going on. You want to know about that? Be with us till end of the video. This is Milad Akbari from Akbari Education. Today we're gonna cover in simple language what is accounting and accounting cycle, how they are interrelated and where we should start the process, how it's going on until end of the process, how we're gonna close the books. This is in simple language only the process which exists in that. In this video we're gonna cover the accounting definition and this accounting cycle and a practice question. Let's jump into that. First of all, what's accounting? Accounting is how your business records, organizes, understands and reports its financial information. What? The financial information. How you gonna record that? You will organize that and you will simply report that, understanding of that and reporting that in understandable way. This is called accounting. But a bit deeper to go in that, the accounting is the process of analyzing, recording. Once you will analyze the records, is it monetary value in that, is it event or it has a transaction value with that, then I will go to the recording of that, then I will classify that in categories, like this transaction is belong to cash and this transaction is belong to like building and vehicles and these things. Then I will classify in different categories. Then after that is the process of summarizing the total of each one to go to the trial balance, and after that I will report to the users. We have the external and internal users which utilize that. So I will report that. This is the accounting. But how the accounting cycle work? Let's go ahead. The accounting cycle starts with business transaction, a bit deeper. First of all, we have the accounting. In accounting cycle, we have the business transaction. So the process will start with business transaction. Remember one point. We have events. And all the events are not transactions. Only we will record in accounting records what have the financial effect. We can express it in monetary terms. Suppose I purchased the computer, then I will be able to record that inside the books of accounts. So first of all, we will consider the business transaction. Is there any monetary value for that or no? Then we're gonna provide the supporting documents. What are the supporting documents required? Next step, to go to the supporting documents. No accountant can come to the ground and say there is a transaction happened for this much dollar and there is no supporting document for that. He cannot record that in accounting system. So sufficient and appropriate documents, supporting documents is required inside the accounting system to enable the accountant to record that. So take care of that. Is there any supporting document for the business transaction I have identified or no? If it's yes, then the next step is to record it in books of prime entry or day books, books of prime entry. We're gonna have a separate video. What are the 7 types of books of prime entry? We'll discuss it in detail. But the step is here to record it in day books or books of prime entry. It is simply list. It is, suppose, let me clarify that. You have an Excel sheet and you're gonna record your credit sales. Each one, I sell some products to Mr. A, I sell some products to Mr. B, to Mr. C, and etc. You will record each of them. for how much cash, in which date, by which invoice number. This is simply listing all of them. And after the listing, you will come to the next step, which will start in two categories. One of them will come to the side of double entry system. You will total that. You will find out the total under the sales, how much sales you did. With the double entry system, you're gonna record that in ledger accounts. You will post that in ledger accounts. One point, do you want to know what's double entry system, how the debit and credit work? Here is a link. Go to that, review the secret of debit and credit and how double entry exists and works. But for the more, we will record it in ledger accounts, and that type of ledger account is called general or nominal ledger accounts. So we will record that in general ledger accounts. This is the process for the total. But let me ask a question. I'm the manager of your company. I come to you. What is the balance on A? What is the balance of account receivable on A? What is the balance of account payable on Y? Could you tell me? From this total, it's impossible. You need to have some memorandum accounts, and that memorandum account is where you will do the single entry in this side. So other side, we need to update the individuals. For the individuals, for the updating that, you have the single entry, because it's only a memorandum account. There is no double entry, and they are not part of double entry system of accounting. You will do the single entry on where? On subsidiary ledgers or individual ledgers. To enable you, you can tell your manager or the CEO of the company how much you have the account receivable from Mr. A, Mr. B, Mr. C. And you be able to express how much you owe to Mr. X, Y, and Z, your suppliers. And here you have the individual ledgers that enable you to express that. Come to this part. We have reached from total by double entry system to the posting to the ledgers. But now the case is here, we need to balance the ledgers. To find out the balance, we need to transfer to the trial balance. The step is here, balancing the ledgers. Balancing ledgers. Once you balance that, how the balancing occur, stay with us. There is another video in our channel which will express that by examples and practice questions. You will balance the ledgers and you will go to the trial balance. The next step is to go to trial balance. And the point to remember, this trial balance is unadjusted. So it's an adjusted trial balance. Why? You need to have some adjusting entries related to depreciation, doubtful debts. So for those adjusting, you will do the adjusting entries. And the next step is to do the adjusting entries. Once you did the adjusting entries, then you will be able to prepare the adjusted trial balance. Then you will prepare the adjusted trial balance. You reach to the point, you have the adjusted trial balance, it's ready in front of you. Now you will go to the next step. Let me go to the next slide, it's visible to you. Once you have the adjusted trial balance, you can go to the financial statement, preparation of the financial statement. Financial statement, we have 5 types of financial statement as per International Accounting Standard 1. One is the statement of financial position, statement of comprehensive income, statement of change in equity, statement of cash flow, and the notes which are disclosed by the financial statements. For that, we will have detailed videos, but now the step is here. Once you have the adjusted trial balance, you will jump directly to the preparation of the financial statements. This financial statement will be prepared and will be shared with the auditors. Once this is audited, you can publish it to the users, whether external or internal or connected users. Now, once it is done, another step is to close our books. How the closing will occur? We have two types of accounts. The two types of account, one is called temporary accounts, and one is permanent. Temporary accounts are the accounts which need to be closed at the end of the year. Suppose you have some expenditures. It started by $1 and it reached to $100,000. That $100,000 is the peak of your expense now at the end of the year. For the next year, you will start from zero again. That's why you need to close the expense account, you need to close the revenue account, and you will end up to whether the profit or loss. And it will end up in the statement of change in equity and affecting the retained earning or the capital of the business. But on the other side, we have some permanent account which is related to statement of financial position. On that, you need to record the points or the accounts or the items which is continually or permanent, such as cash. I have $1,000 at the end of the year in my account. That $1,000 will stay as opening balance for the next period. That's why these are permanent account. The balance of your computer, you have $4,000 a computer, it will stay for the next year. So that's why it's a permanent account and it is appeared in statement of financial position. However, the temporary accounts are mostly appeared in statement of performance or comprehensive income. Let's go to the practice question. We have a practice question as always. The practice question said, which of the below shows the correct steps in accounting cycle? We have read that. Let me clarify before going to that. The business transaction, whether there is monetary value on that, checking the supporting documents, and you will record that in day books, simply a list. Then you will categorize the single entry and double entry. Single entry only for a memorandum, and for the double entry, posting to the ledgers. You will balance the ledgers, and after that prepare the unadjusted trial balance. Do the adjusting entries and prepare the adjusted trial balance. After that, the steps which exist: preparation of the financial statements and closing the books of accounts. That's all. But for the practice question, which of the below shows the correct steps in accounting cycle? The first one, transactions steps. Transactions, documents, books of prime entry, and posting and balancing the ledger accounts. Think of that. Documents, transactions, day books, adjusting trial balance, day books, and balancing ledger accounts. And the fourth one is financial statement, adjusting trial balance, and day books. Which of them? Think of that. I recommend pause the video once, think of that, read that in detail, find the answer with yourself. After that, come and hear the answer from me. But let's continue. The first one is the correct answer. They mentioned that the transaction, the documents, books of prime entry, and posting to the ledger accounts, and balancing the ledger account. These are the 5 steps we have initially read that. So these are the steps, and the correct option is option number 1. Thank you for staying with us till end of the video. If you like to see the similar videos, kindly subscribe to our channel. Press the notification button that you receive the notification for the new videos. And the important one, share this with your friends. Let them know. That will help us all to grow together. Thank you so much.